Hello everyone, I am Buvaneshwari, the housewife. I am pursuing postgraduate diploma in banking, insurance and investment through hybrid system. I would like to thank you to give me this opportunity to talk about anti-money laundering and the KYC norms. So today we'll be talking about how this Indian scenario and what is money laundering, how it works, what are the international level scenarios and what are the KYC elements and how that is the KYC norms are very much important to our industry, the country as well as the universal. Today the universal problem is money laundering and terrorist financing. Indian scenario, Prevention of Money Laundering Act 2002. Under the PMLA Act, the rules were framed in 2005 and 2009. Setting up of Financial Investigation Unit India in 2004. Section 12 of the Act casts certain obligations of banking companies and financial institutions intermediaries in regard to reporting of customer account information and prevention of records. Maintenance of records of all cash transactions about 10 lakhs, all series of cash transactions of value less than 10 lakhs, integrally connected if they have taken place within a month, aggregated value above 10 lakhs. All cash transactions were forged or counterfeit notes have been used. All suspicious transactions made in cash or otherwise. So now we'll see what is money laundering, how it works. Section 3 of the Prevention of Money Laundering Act 2002 defines money laundering as whosoever directly or indirectly attempts to indulge or knowingly assists or knowingly is a party or is actually involved in any process or activity connected with the proceeds of crime or projecting it as untainted property shall be the guilty of the offence of money laundering. That means indirectly or directly, knowingly, if you are the part of the crime proceeds and you are showing it as an untainted property, that is called money laundering. Next. The money laundering is a diverse and a complicated process that involves in 3 stages. It's independent steps that occur simultaneously. That is placement, layering and integration. Stage 1, placement. Physically disposing of cash derived from illegal activity. Funds are placed close to the underlying activity in the country where the funds originate. The funds originate from the banks in the form of cash deposits, high value of checks. So they need bank. One way of accomplishing this is by placing criminal proceeds into traditional financial institutions or non-financial institutions such as currency exchanges, casinos. Where this is happening, these are all happening in currency exchanges and casinos because they are not regulated properly. Launderer injects the dirty money into the legitimate financial institution. This is the thing happens in the placement in the form of cash deposits to report high value transactions. This is the riskiest stage of the ML process because large amounts of cash are pretty conspicuous and banks are required. So banks have to take proper actions, KYC norms and everything in line. So second, what they do, layering. Separating the proceeds from criminal activity from their source through the use of layers in financial transactions. So they will separate the activity, the criminal activity, from the source, and they will put it into the financial transactions. These layers are designed to hamper the audit trail, disguise the origin of funds and provide anonymity. They don't leave any audit trail and disguise the origin of funds. They will not show the source of funds and provide anonymity. They use what they use. They'll use shell companies, offshore companies, and our countries with no or less regulation and a large business center, because lots of transactions will happen in the business centers. Offshore banks are less regulated, and use of shell companies are the fake companies. So they use these type of companies, and these are all the things. Involve sending the money through various financial transactions to change its form and make it difficult to follow. They change the various financial transactions to change the form. How do they change? Layering. Many consist of several bank-to-bank transfers, different names and different accounts and different values, different currencies, etc. Making deposits and withdrawals to continually vary the amount of money in the accounts, and wire transfers between different accounts and different names and different countries. Changing the money's currency, purchasing the high value items like boats, houses, cars, diamonds, etc. to change the form of money, making it hard to trace. So if it is a kind, then there is no audit trail, there is no documents evidence or there in the previous thing, how the source is not available, then it is difficult to trace. Next, it is a stage 3. Stage 3 is integration. What happens in integration? Placing the laundered proceeds back into the economy in such a way that they re-enter into the financial systems as apparently legitimate funds. They make the funds, the illegal funds, into the economy through the financial systems and make it as a legitimate money. That is, means black money converting into the white money. The launderer may choose to invest in other centers. How that is? Let's say examples like false invoices for goods exported, domestic loan against the foreign deposit, purchase property, etc. At the integration stage, the money re-enters into the mainstream economy in legitimate looking form. It appeals as a legal. It only looks as a legal, but it is not at legal transaction. This may involve final bank transfer into the account of local business in which the launderer is investing in exchange for a cut in the profits. A sale of, that is how it happens. A sale of yacht bought during the layering stage. At this point, in integration point, the criminal can use the money without being caught. It is difficult to catch a launderer during the integration stage. It is if there is no documentation during the previous stages. Integration is a very difficult stage to find out the money laundering. Money launderers often sends money through various offshore accounts in countries that have bank secrecy laws. They choose which country to be, in which country they have to take. These countries allow anonymous transactions. There is no sender's information, there is no source of money, from where the money is coming, no information is being recorded. A complex scheme may involve hundreds of bank transfers to an offshore banks. According to the International Monetary Fund, major offshore centers involved in Bahamas, Bahrain, Cayman Islands, Hong Kong, Antilles, Panama and Singapore. So different techniques have been used, types and techniques, debit cards, credit cards. So no face-to-face transactions are happening. Deposit restructuring. The accountants, they may structure the deposit in a way that nobody can catch that amount. The amount will be less. The deposit will be in some other's name, that may be Benami name, fictitious names and all. Connected accounts and connected to each other. So many accounts will be opened and they will be connected to each other. Alternative remittance services, that is the Hawala route. What is Hawala route? No cash or no any modes of transfer is happening. The moment of cash or moment of accounts, nothing is happening. That way this is other than the bank's route. Next is loan bank arrangements. That is a foreign deposit as a guarantee, bank guarantee towards the local loan. Foreign money changes, forex money changes. Money changes, all the NBFCs are all they can do all these things against cash transactions. Investment banking and securities sectors. Here also so many people, mutual funds and everything through cash transactions. Wherever the cash transactions happens, need to be very much strict, and how much the money is being put and whose it is, who are the beneficiaries has to be checked. Insurance and personal investment products, correspondent banking. Who are all doing this all things? Lawyers, accountants and other intermediaries. Misuse of non-profit organizations. The name will be the NGOs or for the charity purposes. The works will be done through the NGOs or will be different. The use of payable through accounts by international launderers. What is payable through accounts? The demand deposit at financial institutions by foreign banks. The foreign banks issues demand deposits and checks to the local customer in one account. That account is being operated by subholders. They are the foreign customer. So this is the way the payable through accounts happens. Use of legal persons. Corrupt politicians, public officials are the main people. Underground banking or alternative banking. Countries in Asia well established legal alternative banking systems that allow undocumented deposits, withdrawals and transfers. Countries in Asia allows undocumented deposits. There is no evidence is being given to you to check out or audit trail about the source of fund and who is operating. All trust-based systems and often have ancient roots, leave no paper trail and operate outside government control. That is called Hawala route. Hawala system in Pakistan and India and fish chain system in China. This is the way the Hawala route works. All in trust-based. They use shell companies. They are the fake companies. The fake companies has been made and there is take a dirty money for payment of supposed goods and services, but actually provide no goods and services. They show what they are manufacturing or what services they will be doing it, but they don't do anything, only in the record. Create an appearance of legitimate transactions through fake invoices and balance sheets. High risk areas of AML. High risk countries, high risk customers, high risk services. High risk countries, who are the countries? These are all things happening? Drug producing countries, mostly African countries. Countries with high levels of corruption in Asian countries. Countries linked to terrorist financing, that you can call it as Pakistan. High risk customers, private money transmitters. They don't keep the originator's information in full and undocumented transactions. The same with money changers, real estate dealers. Real estate is not been regulated in India. Casinos, gambling outputs, again this also not regulated. There is no regulations over there. Non-profit organizations, charities. These are all the customers, high risk customers. High risk services, wire transfers, cross-border transfers as well as the domestic transfers, wherever the originator information is not been in complete, then it is a risky proposition. Private banking, correspondent banking, electronic banking services, that is internet, debit cards and credit cards, because no face-to-face transactions are there. What are the risk factors? Vulnerabilities, that is entities may not be regulated. What are the things is vulnerable? Customer anonymity, secrecy. Some countries they keep customer secrecy. No face-to-face relationship, that is internet and the debit card and credit card transactions. Anonymous funding, promissory notes, cross-border transfers, that is wire transfers. Access to cash globally through ATMs. This is the biggest thing. Should not allow the cash globally through ATMs. The possible risk mitigants. What are the things? Verification of customer identity. Customer identity is very much important. Limiting the funds options. Limit the card value. Monitor the transactions. Very much important. Reporting the suspicious activity on time. That is much more important. No direct cash via ATM. Not to allow the cash via ATM in globally. Money laundering through electronic systems, cross-border activities. Computers, electronic systems can be used as a tool for perpetrating illegal or criminal activities, because no face-to-face transactions are available. Organized criminals can break the security in electronic systems more easily and more cheaply by forcing employees who have legitimate access to the system to furnish them with passwords. The legitimate people whose passwords have been used forcefully to do the criminal activities. Example, recently it happened in Bangladesh. Easier to corrupt an individual in a country where the average salary is low. He is very much talented, he is very much educated, that person is giving, the country is giving very low salary because of the economic problems. That people, that country, that individual is been easier to corrupt it. Money launderers look for the countries where there are highly educated, well-trained banking personnel on low salary to corrupt them. Sources of terrorist financing. Collection of membership dues, sale of publications, cultural or social events, door-to-door solicitation with community, appeal to wealthy members of the community, donation of portion of personal savings, very much important, personal savings, kidnap. These are all the legal sources and illegal sources. Kidnap and extortion, smuggling, fraud including credit card frauds, misuse of non-profit organizations and charities, frauds, thefts and robberies, and drug trafficking. These are all the illegal sources. Use of shell companies by lawyers, because lawyers are the prominent attorney. They have the money laundering network 16s, financial institutions, US and abroad, offshore locations. They charge the flat fee to the money launderer funds. Funds of clients were wire transferred to his offshore accounts. How this happens, how the lawyers does. Moved to the Caribbean destination and USA. Issued credit cards in false names to help the clients withdraw money through ATMs. This is the way the lawyer works, and they take the flat fee for the money launderer funds. Case study: Franklin Jurado. Placement: Jurado deposited cash from US drug sales in Panama bank accounts. Drug sales money, whatever he got it, he just deposited into the Panama bank accounts. Layering, how did he do? He then transferred the money from Panama to more than 100 bank accounts in 68 banks in 9 countries in Europe, always in transactions under $10,000 to avoid suspicion. The bank accounts were made up of names, the names of Santa Cruz landowners, mistresses and family members. Jurado then set up shell companies in Europe in order to document the money as legitimate income. Then the integration. The plan was to send the money to Colombia, where the Santa Cruz landowner would use it to fund his numerous legitimate business there. There is lot of money involved. There he has been caught. But Jurado got caught. This is the way how money laundering works with the help of Franklin Jurado. The dirty money, he just placed this Panama account and so many bank accounts in different countries, in European countries. Then shell banks, he is transferred to the shell banks. Then he has again taking to from the shell companies to Colombia business. Impact on economy. How it impact on economy? It's very much important. The economy is for all the people who do this, who don't know all this innocent people and the normal legitimate people. For everybody it affects. Unpredictable changes in money demand. What are the things we can find it out, like risks to banking system? What happens? Reputational risks, very much important in the service industry. If there is no reputation, there is no business. Legal risks, operational risks, concentration risks. Then survival becomes very difficult to the banking industry. Increased volatility in international capital flows. Increased volatility of exchange rates due to unanticipated cross-asset transfers. The cross-asset transfers is happening more, then the exchange rate volatility increases. Economic and political influence of criminals can change social systems, ethical standards. Crime can infiltrate financial bodies, public officials and the governments. Macroeconomic situations changes. Now we are in the globalization. The macroeconomic situation change. It's very difficult for the country to survive. The economic conditions will become in a depression and no other transactions, it affects the foreign exchange rate. Money laundering poses a serious threat to international community and financial system in countries the world over. It's a universal problem. Combating financial of terrorism. Terrorism financing refers to the activities that provides financing and financial support to individual terrorist or terrorist organization or a group. If the financing is happening to the individual or a group or terrorist organizations. Banks should develop suitable mechanism through appropriate policy framework for enhancing monitoring accounts suspected of having terrorist links and swift identification of the transactions and making suitable reports to FIU and on priority. They can use unique identification code and everything, and they should see the links, terrorist links, monitor properly and timely, quickly that should be reported to FIU India on priority basis. Banks may be noted that both Al-Qaeda sanction list and 1988 the sanction list, there are two lists being circulated by RBI to be taken into the account for the purpose of implementing the section 51A of the Unlawful Activity Prevention Act 1967. So many people's list has been produced by RBI. So the banks should ensure the name of the new as well as the existing customers do not appear in this list. Before opening an account, they should check over this, if this new or any existing accounts are in this list or not. If any, should be intimated to Financial Investigation Unit India immediately. If this is a universal problem, then what are the remedies have been taken, what are the precautions, because prevention is better than cure. So FATF, that is Financial Action Task Force, this has been established in G7 summit that was held in Paris in 1899. What this organization or what is this establishment does? An intergovernmental body. This is happened after intergovernmental body. This is when after post 9/11. What is the purpose of this? Development and promotion of policies both at national and international levels. National level, what should be there, and international level, all these standards to combat money laundering and terrorist financing. 34 countries, India is being one of the observer status. Still it not got the status, it's an observer status. Published 40 plus 9 recommendations. Political level commitment to comply with FATF recommendations. Political level should be, the commitment has to be there through political level. That is very much important. Then if political level changes, then all economic and everything in the country changes. FATF focuses on setting standards for AML and terrorist financing. Assessing implementation of